Some disappointing data is guiding European markets lower. For more on that now, we're going to turn to Laura Board in the Deal's London newsroom for that, as well as individual stocks. Laura.
Morning, John. Yes, rather disappointing data on Chinese manufacturing from HSB Market for the month of April, with the index holding resolutely in territory which signifies a contraction. The same data for the Eurozone, actually a bit better than expected. Nevertheless, European indices down marginally today. In corporate news, France's Publicis, the advertising giant, is down after an interview in the FT with Omnicom CEO, has stoked fears that the two ad Goliaths may not be able to execute their July merger agreement. The problem seems to be with three European tax authorities. We've known that China's antitrust regulator were dragging their heels on approval, but the tax issue is a relatively new one. The stock down about 2% right now. Over in Sweden, Scania, the truck maker, also down after yet another shareholder has come out and said it would reject Volkswagen's $9.7 billion buyout offer for the remaining shares. The independent committee of Scania has already said that offer is too low, and VW has until Friday to get 90% acceptances for its offer. Some good news in London, though, from Associated British Foods. The sugar, food ingredients and retail group shares are up about 9% now. After first half results came in ahead of expectations, its Primark discount clothing chain is surging, both in terms of profit and revenue. It's going to open its first US store in downtown Boston at the end of next year. That Primark business now accounts for about 2/3 of ABF's profit and more than 1/3 of its $10.4 billion odd in first half sales. That's all from me. Back to you.
Thank you very much, Laura. This is Laura Board reporting from the Deal's London newsroom.